today is our most seasoned and erudite speaker, Mr. Bismarck Rwani, the Managing Director and Chief Executive of Financial Derivatives Company Limited. FDCL is a company that offers valuable research and data to provide insights for investment decisions in sub-Saharan Africa and especially in Nigeria. Bismarck has more than 30 years' experience as an economist, banker, and financial analyst. He's a chartered member of the Institute of Bankers of England and Wales and is a fellow of the Nigerian Institute of Bankers. You're welcome, sir. We're always glad to have you here, and it's always a pleasure to have you on board. Thank you for being here.
A privilege.
Our host remains Ade Buraimo, the Group Managing Director of Alpha Morgan Group. Ade is a banker with over 25 years of commercial and investment banking experience. He was the Managing Director of GT Bank Limited Sierra Leone in 2010. And prior to that, he was the Managing Director of GT Homes, the then mortgage banking subsidiary of GT Bank. He's a fellow of the Chartered Institute of Bankers, an associate of the Chartered Institute of Securities and Investment UK, an associate of the Chartered Institute of Stockbrokers, and a non-executive member of the Fund Managers Association of Nigeria, where he serves as the Chairman, Ethics, Standards, and Regulations. Ade, you're welcome. Thank you for joining us again today.
Thank you.
And also on the webinar is George Imade. George is the Managing Director of Alpha Morgan Capital Advisory Partners, our investment banking subsidiary. George will be our closeout. He will give the vote of thanks at the end of the webinar. So welcome, George.
Thank you very much, Joey.
So, as usual, our session today will follow a pattern. Bismarck will present and review the economic landscape, after which we will take questions. So we ask all the participants to kindly type your questions in the Q&A box, and we will address as many questions as we can after Bismarck's presentation. And then after the Q&A session, George will give the closing remarks, and of course, we will close after the closing remarks. At this point, I'll hand you over to our host, Ade Buraimo, and I welcome you all once again and have a most interesting session. Thank you. Over to you, Ade.
Good morning, everybody. Thank you so much. Good morning, everybody. My name is Ade Buraimo. I happen to be the Group Managing Director. I'm delighted and happy to have everyone in attendance today. We are sorry for a little break sometimes. We're in the middle of a lot of things, but we thank Almighty God how far we have gone. I'd like to welcome all of you to this 13th edition. And we want to believe that the previous one has been very productive. Today, we expect our speaker to touch on a lot of things, and therefore we're going to save so much time for him. And without much ado, I want to once again thank our speaker, our friend, our leader in the industry, Bismarck Rwani. Thank you for always being available for us. Thank you for speaking for us in every opportunity you have, even at the presidency. Thank you so much. We are very, very grateful. We'll now allow him to take the floor as usual, and I'm sure it's going to be an interesting moment. Mr. Bismarck Rwani, thank you so much. We are very proud of you. Thank you for what you are doing for the industry and continue to do your best for the nation too. Welcome, sir. The floor is yours, sir.
Thank you. We'll upload the document so that everybody can see that. Again, good morning, everybody. Thank you for the privilege to speak to such a wide audience. Alpha Morgan is extremely important in the African financial services industry. And so it's always a pleasure to be on this platform because it reaches out to many across nations, across the continent. Now, as we started discussing this morning, I remembered something. Exactly 4 years ago, that was before COVID. It was just about COVID was just about to happen. And there was an election. And I remember that I was sitting somewhere in Virginia. And it's like yesterday when they were calling the various states and the Electoral College. And Biden was sworn in as president. And all of a sudden, 4 years have gone by. And we are at it again. Trump is back. Kamala is on and is leading somewhere. But what I'm saying, what has happened in 4 years? And how come it has moved so fast? And the world has changed dramatically. And what is it about human nature? It's about managing, accepting, and managing change. That's where we are. So, without much ado, we're going to be talking about the global investment environment because we're all investors here, and the outlook for 2024. We're going to look at the investment landscape as we are, and the outlook for 2025. So we're going back to 2023. We're looking at how 2023 panned out. We look at 2024, which is ending, and this is the time to take a deep breath and see what's going to happen in 2025. We'll look at investor strategy and sector opportunities and risks, and then we'll conclude very quickly. So first and foremost, what's the global landscape? What does it look like? And what was it in 2023? Everybody can remember where they were in 2023. I think we're just getting over COVID. They're still wearing masks. We're taking vaccinations and different types of vaccines. I remember vividly, it was a different world. Before you traveled anywhere, you went to take what they call a COVID test. When you arrive there, you did another test. When you're coming back, you take another test. And when you arrive here again, you take another. And they even threatened to seize our passports if we came back without a test. I remember vividly the first day, some Italian guy came in from Italy, from Saipan, and drove up to Ibadan or something, a week ago. And that was the index patient. I remember vividly. Then all of a sudden, everybody got COVID. Well, so now fast forward to 2023. What was the world like in 2023? Were you making money, losing money, or even were you just lucky to be alive? Right? So 2023 was a year of what we call resilience. We were not there yet, but at least the worst was over. The US now, missed a recession. It didn't have a soft landing, but at least it avoided recession. Inflation was a persistent issue, and it was on the top. It was a front burner issue all over the world. But it didn't seem to be easing up. But inflation had got to over 20, 30-year highs, because in the US it had got up to 11% per annum. The last time we saw this was in 1982 during the Paul Volcker years. Then tighter monetary policies. So we had monetary conditions that were loose because before then there was a stimulus plan, there was everything, the fiscal plan and follows. People were being paid to be at home, right? And all of that, the effect of that loose financial conditions laid into the hands, and then that was the origin of inflation. As if that was not bad enough, these guys attacked Ukraine, and the Russians attacked Ukraine, and they were what they call supply chain disruptions, which created problems for everybody. Geopolitical tension in 2023 was not as high as it is now, but it was there, but it was more like what was going to happen in the Gaza problem wasn't there that time. The Hezbollah problem wasn't there that time. We were just having problems between Saudi Arabia and the Yemenis. Foreign direct investment was declining, but it decreased all the way to $1.3 trillion. It had peaked much higher than that. FDI flows fell significantly in developing countries. So people, when things are tough, people just stay safe. Many people bought gold. And in 2023, the world, there was stress testing, including banks, and exposure to. One thing we knew in 2023 While in 2009 and 2015, the bank failures were a result of credit risk because of default by borrowers. In 2023, the problem was because interest rates have been low for such a long time. Banks like Silicon Valley Bank, Signature Bank, and others took positions and bought bonds. So when interest rates went sharply higher, the bond prices fell, and these guys were underwater transactions. So that's what happened. But the regulators and policymakers this time were not going to wait for something to happen like what happened to Lehman Brothers, Bear Stearns, and others in 2009. They were preemptive and proactive. So they took measures. And you could see what happened while it took 5, 6, 7 months for Barclays Bank to say no, and for the Bank of England to say no to the proposed merger between Lehman Brothers and Barclays. It took 4 days for the Swiss authorities to allow Credit Suisse to be acquired by UBS. That was interesting. So what does it tell you? 2023 was a year of proactive activity, regulators on their toes, the unwinding of COVID, and the beginning of a new economic dispensation. What happened to you? Of course, there were bank reviews and stress tests, and the Basel Accord were all implemented to the detail. China's economic recovery has been, because we know or we believe that COVID started in China, and the Chinese were, I think, the last to actually come out of COVID, even though their economy wasn't that battered. They still were able to inch up about 3 to 5% growth. So in that environment, the Chinese real estate sector was also under pressure. So if you look at 2023, the top 5 performing stocks, because we're all investors here, there was a company called AppLovin with revenue up 258% and revenue up, profits up 258%, but revenue up about 70%. Technology services is what NVIDIA, well, everybody knows who makes the chips for AI and all of that. Their profitability was up 227%, revenue up 0.3%, and it's, everybody, it was a new gold and a new everything. So you had DraftKings, Vertiv, Palantir. These 5 companies, markets were rewarding them because of entrepreneurship, innovation, and youth. So for those who had the courage or who had the, or how would I say, the luck, courage, they invested in this thing, and they made, as high as you can see, each of those 5 companies made over whoever invested in them made over 250%, when inflation was 11% in the United States, when the S&P and others actually grew by only about 20 or so percent. That doesn't stand out here, but like we said, it was novel, it was innovative, and it was entrepreneurship. Okay, can everybody hear me? Let's see.
It's better now, sir.
Better now, okay.
Yes, we can hear you.
Okay, no problem. Now, the funds, because you have collective investor schemes in the US, and you have independent investors. The funds in the US, the performance of the funds, the highest was PGIM Jensen US Growth, returned 53% in an 11% inflation environment. BlackRock, which is the biggest asset management firm in the world, returned 52.68%, and it went all the way down to Barley Gifford, which returned 46%. So T. Rowe Price, these guys have the best fund managers, and you can't go wrong. So for those of you in 2023, the S&P returned 24%. If you went into those funds, you got an average of 46 to 57%, 53%. So the return on investment was about 20% in an inflation environment of 11%. So you did well in 2023 if you were in this particular market. So in Nigeria, I'll come back to that. So the global economic and investment landscape in 2024 was completely different from that in 2023. So we made money in 2023, but we're just recovering from COVID. All of us had black eyes. Now, 2024 was a totally different year, and that is the year we are in, which is winding down. And the same time flies by fast when you're in good company. So I think that is it. So in the global environment in 2024, inflation was slowing down, monetary policy normalization, oil prices were beginning to trend downwards. There were elections all over the place in South Africa, in the US, in the UK, in France, right? FDI flows have started increasing and rising by as much as 78%. Don't forget, in 2023, it dropped by 7%. Now it's up 78%. So investors were hunting for yields. But the geopolitical tension persisted. I'll take a minute to see what you as a Nigerian investor was looking at in 2023. This is just the globe in 2024, but let me go back to 2023. In 2023, Nigeria had currency redesign. Nigeria had cash shortage and POCs were charging to the nose. We had long queues in ATMs. We had elections. We had petitions, had decisions. We had subsidy was gone, at that time. We had the currency unification, but we had treasury bills at very low rates, 2-3%, while inflation was running as high as 25, 27, 28%. So that was the world in which we were living. But if you invest in the Nigerian stock market, I will get to those slides in a few minutes, you made something like almost 40-something%. So even though inflation was 24, 25%, you are making money more than inflation. But if you dollarize that return, you're actually underwater. So, but 2024 is a different year. Like I started this presentation saying that 4 years ago, I remember where I was in Virginia. I remember when I was watching television, went to bed, and it was like as if Trump had won the election. And I woke up the next morning to find out that no, not so fast, but we didn't know. And the next thing, Biden was declared winner. Don't forget that election, Biden was campaigning from his basement. Everybody was wearing a mask. There were no rallies. It's a completely different world from today when there are rallies and attempted assassinations and all. So 3 asset classes in 2024 that made money. Digital asset allocation, Bitcoin. Bitcoin was considered as dead. Warren Buffett said, call it rat poison, right? Everybody ran away from it. So, but if you came in when it was down, when Bitcoin was 20,000, 18,000, you would have made 157%. But I'm not recommending because I don't recommend what I do not understand. So Bitcoin is, to me, it's something that if you have some extra cash, you can do that. The Ghana Stock Exchange, Ghana got beaten seriously because they defaulted, they did everything. Inflation got all the way to 53%. But Ghana Stock Exchange, after all is said and done, returned about 40%, 39.44. The Nigerian Stock Exchange returned about 30.4%, all right, in spite of FX losses. So what's the global economic outlook for 2025? And that's more important. The past is gone and gone forever and will never come back. Interest rates are beginning to decline. And they don't diminish, they decline. Allowing central banks. So the easing cycle has started, and what you must understand is that the monetary policy and monetary conditions are two different things. The monetary conditions were tight, and now there's easing. So the monetary policy always runs counter-cyclical to the monetary conditions until you achieve an equilibrium. There's a soft economic landing. I don't think there'll be a recession. I think there'll be what we call a Goldilocks. No matter what happens in the election in 3 weeks' time, America and the US stock market is going to rally. I prefer Kamala Harris because Trump is always an unknown quantity. We never know what he will do. But again, maybe that's what makes it interesting. It's an 80-year-old man contesting with a 59-year-old woman. So let's see how it goes. Global economy is projected to grow by 3.1%, down from 3.2 this year, next year. So one of the most interesting developments is that India will remain the 5th largest economy in the world. And India is going through a significant transformation. Well, they have not been able to get a hold on their population growth. China has done that. They're working hard to get people out of poverty. And Modi, who is the prime minister, is very charismatic, but he's beginning to lose touch. And so India is a major capitalist economy, and we has invested so much in ICT, so much in academics, and so much in productivity. So India becomes and India is one of our largest trading partners in terms of imports. We import a lot. We export a lot of oil to India and gas as well. So U.S. inflation is now down to 2.3, and it's going to go lower in 2025. Why? Because of increased productivity and increased spending on building infrastructure, because U.S. infrastructure is primarily outdated. If you go to Asia, Singapore, Malaysia, Taiwan, the infrastructure there is light years. I mean, 10, 20 years, in fact, almost 30 years ahead of the United States. The United States is a backward country in terms of infrastructure when you compare to. So how does the United States catch up? It's all right to be the policeman of the world, but the policeman of the world needs a house of his own so central banks across the world, in Canada, in the European Union, in Britain, even in Turkey, are cutting back on cutting rates. Supply chain disruption. People have found their way around the Ukraine crisis. So the price of urea, the price of fertilizer, price of all those things have actually begun to decline. So we are seeing inflation coming, and the Federal Reserve has begun its cutting. It has cut 50 basis points. It's going to cut another 25 and another 20. So there are 2 more cuts this year, bringing the total cuts to about 1%. That's significant. Consumer disposable income will increase because clearly Americans are having more money, and since rates have come down, their mortgage payments have declined, and productivity has risen. So I think we are going to be very interesting year, 2025, United States. So if Kamala Harris wins, there will be a continuation of the global engagement and globalization of markets. I think that you would see not a very high-handed, but a more balanced picture in the Middle East and the European Union and NATO and all of that. If Trump wins, there's going to be a lot of disruption initially, but again, Trump is a businessman, a deal maker, so he would do what we have to say. So we've discussed that. So now we should understand one thing: interest rates will drop in the United States, productivity will increase, equities will increase in prices, and global output will increase by almost, even though it says 2.3%, global GDP is now over 110 to 120 trillion dollars. There will be reorganization the Chinese will lose some ground, Indians will gain a little bit, the European Union will gain some, and South America will also gain some grounds. So we're looking at those markets. Now, if you the policy outlook, so asset classes, right? If I take the asset classes that with strategic asset allocation for 2025, gold, because interest rates in the United States will decline. The moment you bring down interest rates in a country, the currency weakens. So the US, as the US brings down interest rates some more next year, the dollar will weaken relative to its trading partners' basket of currencies. We will also see that once the dollar is weakening, the price of gold moves in the opposite direction. So we think the price of gold will increase. Therefore, you should take a position based on the fact that US interest rates are going to come down. Safe haven gold, 15%. US equities, I think 30% allocation with fair. Nigerian stock market for 2025, yes, my colleagues say 10%, but I will do 20 to 25% there. Real estate in Nigeria, quite frankly, real estate is a growth sector, but the time to invest in real estate and when you begin to pick up the yield, there's a lag. So I would say that if I'm going to invest in real estate, because 2025 is the last year before we go into campaigns. But the elections are in February 2027, and handing over is in June 2027. So the whole of 2026 is about campaigning. So all the time you have is 2025. And if you're investing in 2025, you better get your returns in 2025, every other thing. And the election that is coming is going to be a very tough one as well, because technology and everything, the economy will be, as the economy recovers, and the incumbents will try to sell themselves while the opponents are going to pull aside. So I will go long on the Nigerian stock market because you begin to see the benefits. Real estate, I would be cautious about, except if I would say real estate, commercial real estate is different from residential real estate. Residential real estate in markets that are close to urban centers, where technology has been used to enhance communication. Treasury bills will stay. I will put, let's just assume that my colleagues 30%, and I will Bitcoin, I would have anything 0 rather than 3, but this forum is for those with limited speculative instincts. So I would take the rational investor approach. We need to move this. Okay. So on Nigeria, because global interest rates are declining, Nigeria will have an advantage, and I think Nigeria is going to the market in the next 3-4 weeks for a $2 billion Eurobond issue to fill the waters. Don't forget, we raised $900 million in the diaspora bond issue, and it's up to, there'll be another issue of that, bringing us up to $2 billion, plus the $2 billion from the Eurobond market. That will give us all about $4 billion. Will that do the trick? It won't do the trick, but it will help and go a long way, right? And if that money is properly sold and distributed in the Nigerian system, it should help the currency, because but there's a lot more work to be done. So investment climate in Nigeria will improve. We have a window of 12 months before we go into election season. Financial market opportunities, because the financial services industry is growing at a more rapid rate than others, but more from insurance and other financial institutions like OPE, Kuda, and all the other things. So we would take a look at that. We think the geopolitical risks will be declining because somehow Putin has gotten another term. We know what we think, that with the Kamala Harris presidency, it's going to be much more sublime, right? With the Trump presidency, there'll be some uncertainties, but Trump is a drama master. He used to be a reality TV host in The Apprentice show, so he knows how to keep audience in suspension. That's his job. The only person who did it better than him, unfortunately, passed away last year. A man by the name Mario Berlusconi. Mario Berlusconi was the prime minister. He won about 15 different elections in Italy, and how would I put it, as strange as it was, in terms of having no discipline whatsoever, extremely promiscuous individual, but the thing about him was that he kept Italy spellbound. And when I asked what was Berlusconi's education, they said he had no education. So what was his job before he became prime minister? He was a singer on a cruise boat, right? So, cruise boat. The thing about a cruise boat is that you can't go anywhere. You're in the boat for that period. So whoever is an entertainer on a cruise boat has to know his job very well to keep you spellbound. So, while Trump was a reality TV host who had the gift of having an apprentice, Mario Berlusconi was a singer on a cruise boat, which was even more therefore. So he passed on last year, but I read somewhere yesterday that his children, his daughter and his son, are coming back into the political landscape. First of all, he was a very, very wealthy man. So we think inflation is going to be controlled. We think that geopolitical risk will be minimized and financial markets opportunities will exist. So what's the Nigerian investment outlook? Because that's what we are here to talk about. The landscape in 2023 was this. The Nigerian economy grew by 2.7%. A decline from, it was 3.1 in 2022. In 2023, we grew by. Inflation average climbed to as much as 30% from 21% in 2022. Monetary conditions were loose, and the new CBN governor changed of cabinet members in 2023. The governor came in towards the end of the year. Economic reforms were announced without sequencing properly, and the institutional reform that normally precedes or succeeds immediately after what do you call it? After was not there. So we had a haphazard outcome. So now what are we trying to do? Press the reset button, stabilize the economy, and then put it on a pedestal for growth. FDI flows peaked at 183, but actually began to decline. Like I said before, there was a cash crunch, and also the currency tumbled in 2023, tumbled all the way from 800, 700 para market up to about 1700. It actually at one point touched 1900 in 2023. So what happened for those of you who invested in funds? You got a return, even though inflation was like 30%. Go back here, sure. Inflation was 28.92 years. Now, if you invested in FSDH Coral Income Fund, you got 7.7%. If you invested in ARM Discovery Fund, you got 23%. So you against inflation, you lost only 7%. If you invested in the bond fund of FBN Quest, you got 4.2%. If you invested in IBTC Nigerian Equity Fund, you got 41%. So it came out slightly ahead. If you invested in Nigerian pension fund assets, you got 22.4%. So 90-day treasury bills in 2023 was 7%, 182-day treasury bills were 10%, and 364-day 13%. Compare this to the rate of inflation. Compare this to the average dividend yield you got on companies at that time. You were better off staying where you were than investing in this gilt-edged securities. So the Nigerian top, the companies that made the highest return, Transcorp Hotels got 1,022,000%. Revenue was up 36%, and if you invested in it, you got about 1,000%. Transcorp Hotel were making out money like bandits. First and foremost, the cost of putting up a new hotel in which are much higher. So you had the other hotels we had, I don't remember, Chelsea Hotel and how it'll come back to me. Champs is another company we never understood. Those who invested in it got 795% return. CWG got 721%. Transcorp Energy and conglomerate went up 666%. MRS got 644%. And so these are the leading stocks. Whether they're liquid is another story altogether. So if you look at earnings growth and share price appreciation, you can see very clearly The earnings growth is the other line here. And the stock return, you can see Dangote Cement made 139%. Boa Cement got 90.7%. Boa Foods got 47%. MTN got 3.79%. And average. One is not audible. Not audible. Okay, so this.
Yeah, there are a number of comments here about the audio from your
Yes,
end.
we are going to come out and come back in.
Okay.
Thank you.
Okay, somebody said the audio is better when you move closer to the computer.
Thank you. Okay, how's the audio now, please?
Okay, I can hear you clearly on this end. Let's see what people say. Okay, they say it's perfect.
Okay, perfect. Thank you very much. So here we go. So if you're buying stocks last year in 2023, you would have got Dangote Cement, which was good, Airtel, which was a steal, Boa and Cement was good, MTN, you lost some money there because MTN came up with new issues. But MTN is what we call a growth stock, not a value stock. So we have to wait and see what happens to them for 2025. We think that MTN will write off all its FX losses and will post very strong earnings, especially after the government NCC allows them to adjust their tariffs, which is inevitable. They have to do that. So now, what the investment outlook in 2024? We are now in 2024. What happened? We are growing at 3.19%. Good, but not fantastic, but good. Inflation is persistent. We've gone all the way to 30, as high as 34, 35, but now we are projecting, I think MDC is projecting 32.7, right? That will come out in the next 2-3 days. MPC has hiked cumulatively by almost 7.5%, I think. We are 27.25, right? So we have excess basis points, right? So CRR up to 50%, We'll give you that figure in a minute, while the cumulative basis points in a few minutes. The stimulus package has been announced. So we are doing $2 trillion naira now, and another 4 trillion naira early in 27, 26, 25. All of that comes to about almost 2% or 2% of GDP. FDI flows are beginning to come back in, but we're also seeing massive divestment by companies that find the business environment difficult. There's high import demand and speculative activities have renewed pressures on Naira. So we're seeing that. That's the environment in which we are in. So domestic investment environment 2024, Nigerian Treasury bills started the year at about 11% for 364 days, 5% for 90 days, and NPR was 18.75. Guess what? By September, 364 days was 20%, and 90 days, 17%, and NPR was 27.5. So what was happening if you bought equities and waiting for your real return or capital appreciation and your dividend, you were better off putting your money in Treasury bills, 365-day Treasury bills, which you can get as high as almost 22, 23%, because the dividend yields actually fell to something like almost 4%. So that's the environment we're in 2024, or we are in 2024. The other thing we are looking at is NPR. We do not think that there will be an increase in November 25th meeting. We think that the NGX will give up some of its returns. We've seen some very interesting returns. Some companies have made over 1,000%, but we think that as interest rates have increased, we think that you'll begin to see a decline. But it's a tide that will sink not every boat, but some boats. So we see fast-moving consumer goods, we see construction companies, we see manufacturers struggling. But once they've written off their forex losses, then the companies become profitable. Are they going to raise? They're going to raise additional capital. So one thing you have to bear in mind is that when supply of any commodity increases, then the price will drop. So by all the banks raising additional capital means the supply of banking stocks is going to increase sharply, and we're going to see banking stocks correct themselves. One. Two, even the companies that are going to restore their net worth, like Nigerian Breweries, Guinness, and others, they're going to raise additional capital. The stock prices will come down initially. But having said that, because the stock prices are low, it means it becomes a buy opportunity, because the profits they make now will be compared to their capital base will be much higher. So the return on investment is going to be very interesting. Capital importation, we are seeing that begin to pick up again, and that's becoming very interesting. The capital importation, but the capital importation is more of FPI, what we call hot money, rather than FDI, which is cold and long money. So we're going to see that change gradually. Hot money will go away. Hot money is like a hurricane. When it comes in strong. When it's leaving, it leaves a disaster behind it. So again, countries should be careful about relying on hot money. That's why it's called hot money. Okay, so you see that happening. The next, this is what the GDP will look like in dollar terms. It's about $364 billion. It used to be $500 billion. Two things are going to happen. One is that we are going to rebase this cycle, the GDP, so we'll get some. We are also going to reconstitute the inflation basket. When we reconstitute the inflation basket, what it does mean is that inflation will be more reflective of reality. If you look at the basket today, it's only 1% on telecoms, on communication. God knows that every Nigerian, I don't know, especially the young ones, spend more than 1% of their income on telephones and on bundles and all of that. And so to say that you are spending 56% of your income on food and spending only 1% on your telephones, all of them, young people, they're on their phones all the time, right? So it cannot be 1% of their activity that is being, right? So when we reconsider this and telecommunication becomes maybe 7% in the inflation basket, just as much as rice. Rice is 8% in the food basket. We'll see a more balanced picture, right? But don't forget that the telcos are also going to increase their tariffs. Power, what you're spending on power now, and they haven't reviewed it, but I am sure that people are spending more than 4 or 5% of their income on power-related activities, either petrol, diesel, or NEPA. It depends on whether you're on band D or band Z, but most people say they're on band A. So if you are on band A, I think, or whatever it is, I think that two things will happen here, that the federal government will write off most of the debts of the discos. I think that also that the discos will get about 5 to 10 million meters. Once the metering starts and they begin to get the revenue and not pay to the banks as interest, then power supply will improve. Therefore, in looking for investment opportunities, look out for power, because it's when the tides are up that we know those who are swimming naked. So we think that GDP will grow because, one, consumer income has reduced, but there'll be an injection of consumer income. The tax tax profile has changed. Even though the nominal VAT rate has increased, the number of exemptions, so the amount of VAT collected will reduce, and the state governments will have less money to spend from there, but they have to spend the one they got. And the state governments are going to be under pressure. Why? Because money is going to be going directly to the local governments. For now, they control the local government. But nothing unites Nigerians more than stealing money, and nothing divides them more than dividing money. So once all these governors that think they have local government chairman under the moment the first disbursement gets there, then the next thing you will hear the next month is the battles on how, and you will have, because the chairman of local governments have a lot of money now, and you will have first ladies of local governments, having parties and all that. So we think that there'll be a lot of interesting things, because this devolution of power, you had governors and first ladies of governors, now you have first ladies of 774 local governments all over the place. And so in all, there will be 774 plus 36 plus 1 first ladies in the country. That will be a lot, 1,000 of them. All right. So what I'm saying is that money, when you look at this GDP, that part which is G, which is $15.6 billion, that government expenditure, government revenue will increase, government expenditure will increase, but government expenditure is going to be well, democratized all the way to the 774 local governments. Initially, they'll be celebrating. Eventually, they will have to do some work. Then the other thing is net imports, net exports. What are we going to be exporting? We're going to be exporting oil, as usual, gas, as usual. Cocoa is doing well. It's about $6,000, $7,000. It should be $2,000 before. Ginger, soya bean, cashew, gold, and then smuggled food, maize, smuggled yam, and fertilizer, cement. So we're going to be having this. These are the things that we're looking at. So this is 2025. I've actually touched on it somehow. Couple of things. First of all, the import duty waiver, which will expire in January, 150 days. I think it will be extended because the goods are just coming in. So before you know it, so let us assume that they'll extend it to Easter. The price of petrol is now at 1,030 if you get it. In Lagos, it's 989, I think. 999. No, 989, yes. All right, so petrol is 989 in Lagos. In Abuja, it's 1030. In Maiduguri, it's 1,200. In Benin City, I know it's 1,200. Right, that's not the official price, but that's what you can get it. If you the queue. In Warri, it's about 1,300. In Ilorin and Ibadan is about, I'm not sure, Ibadan is about 1,100. Ibadan has many markets there. Inflation begins to ease up in early next year. The monthly loosening will start early next year. Dangote Refinery and other refineries will start production, but the discussion is still on as to who is causing the high price. Is it Dangote who cannot sell below cost, or is it NNPC that is playing with mirrors? But sooner or later, things will settle. We think the Naira has been clobbered, quite frankly. But my attitude toward the Naira is that if the true value of the Naira as we see it today is that all the things in the shops are trading at 1,600 Naira values, 1,690, 1,700. If you buy a ticket, so 1,629 or something like that. If you buy anything, it's all at that 1,700 range. Therefore, that's where the market is because of the structure that we have. But when things begin to ease up, when the Eurobond process begin to come in, and Nigeria begins to ease up things and manage its domestic money supply, then we may see the currency begin to appreciate towards 1,500 early next year. But right now, you come to terms with the fact that the Naira will continue to trade at the current levels at about 1,600 Naira to a dollar. We see a couple of things. The impact of investment, if PMS at 1,200, margins will reduce. But one thing about the PMS price that if truly, really and truly, we have the price is at 1,200. The daily consumption in Nigeria, technically speaking, cannot be more than 25 million liters a day. So is 25 million liters a day enough to keep the 4 government-owned refineries, the modular refineries and Dangote refinery, to break even? I think so, but that will help us. But I can tell you clearly, because we went from 600 to 900, which is almost 60%, 50% increase. The last one we've just done is about 13%. So the increase that you're going to be getting now compared to the base price will not go more than, say, 10%. So a 10% increase in the price of petroleum will not lead to PMS, not lead to a 10% increase in transport fares. The transport fares will probably go up at a lower pace. So we should accept that, yes, increased petrol price increases inflation, but inflation, the rate of change on inflation is actually declining. Now the question is, when will inflation begin to reduce? When will monetary loosening begin to play and bring down interest rates? And when will the Naira get stronger? All of these things are going to happen in 2025, but not wildly. No wild expectations. Nigerian stock market will correct early in 2025. So if you're going in there, you should be selling and then start buying at the end of the first quarter in 2025. Some companies will raise money. Some big companies like the telcos, the cement manufacturers, the light manufacturing companies, all of these companies should be doing much better. The dividend yields 5%, while the treasury bill rates are 18.59%. It's very clear that there's an opportunity in holding treasury bills. But please remember that treasury bills have its own liquidity, while the stocks that are doing well 1,000% may not be, when you want to sell them, there may be no buyers. Okay. Institutional investors will rotate their portfolios towards safety and return, and a lot of them will also take foreign currency position. There'll be the growth of the what you call the collective investor schemes, like all the funds, like the Alpha Morgan Fund and all, are going to be doing very well because they have the professional managers. So high borrowing costs will increase the probability of default in loans, but also because of good risk management, we will not see many losses. And I also want to take the time here to say that Mr. Brimo, please grant me the permission to announce that Alpha Morgan has been granted a full banking license. So you will have Alpha Morgan Bank, which will be working side by side with the Alpha Morgan investment arm to complement themselves. And quite frankly, because of their pedigree and their expertise and their financial reputation, I have no doubt that since they manage an asset management firm very well, managing a bank is very easy pickings for them. So please congratulate them and
thank you.
Clap for them.
Thank you so much, sir.
Thank you.
All right. So,
Thank you very much.
it's very, very important.
Thank you.
The banks, the banks that are well managed, right? You will know them very quickly, and this is one of those ones. So I give them my unreserved endorsement. Now, increased government spending, and government spending will be targeted at projects. In other words, you see government spending and combined at what is public-private partnership. You see a lot of these things happening, and so we'll be looking at those areas. The infrastructure investment, that's another area that is extremely profitable and lucrative. So in infrastructure investment, please don't say because the Lagos-Ekpe Expressway toll gate was a source of conflict, one source of scandal, and then finally EndSARS. So when you hear tolling of a road, people just say, "Oh, it's EndSARS, I'm not going there." No, but that is the furthest thing from the truth. Tolling is one of the most profitable roads because the depreciation of the road compared to the tolls you collect is nothing. And in collecting the tolls, you have the billboards, you have the maintenance sites there, you have the fast food joints that are on and the fact that they use drone technology and everything, and they use the tolls to maintain the road, the returns are exceptionally high. I know, for example, that the Lagos to Abeokuta road has a vehicular count of about 40,000 vehicles a day, and of which you'll be collecting 2,000 for the trucks and 500 for the cars. You have no idea all the trailers and all that go on that road. It's a gold mine. So investing in infrastructure assets is very lucrative. So, but depending on what, don't just jump into it. So once you hear that there's a fund and then you can actually invest in those funds, the infrastructure funds. So Nigerian banking, we just said, congratulated our friends and our hosts, Alpha Morgan. But here, this is a business where the barriers to entry are pretty high, but the exit barriers are even higher. So we think that that space is being liberalized, is highly competitive. We think that the Kudas and Opes and others have taken transaction business away from the mainstream banks. We think that the letter of credit business, international trade finance and all that will depend to a large extent on Nigeria's credit rating. We think that the consumers are going to have a stronger bargaining power. People, if the POS women are able to take away a lot of cash business from the banking system, and OPs and others could have taken away transactions. So we think that is highly competitive. And the Momos and Smart Cash and all of those guys, the telcos are coming back with a vengeance into this business. So bank capital will be required, but that is not sufficient. It is the bank management and their strategy that will determine the winners from the losers. But this is a system, when I look at what has happened in Kenya, when I look at what has happened in Ghana, there's enough for everybody. Only that to him who has more, how do I say it again? To him who has more shall be given.
To whom more is given, what is expected.
To him who has more shall be given, and to him who doesn't have even a little he has shall be taken away from him. So we think that in 2025, there's going to be a reorientation of rebalancing of portfolios. Okay. So the increased capital base means increased supply of shares, but the reduced return means that the return on capital is going to be maybe lower. But at the end of the day, we think that the CRR will come down, the liquidity ratios will remain where they are, the cost of borrowing from the central bank window is going to be reduced, and that the currency will closest thing to a convertible currency, and that the central bank will come up with an auction program which will take away the speculative premium on the currency, and that makes the currency begins to appreciate in 2025. So highly competitive, highly liberalized, over-regulated, but because of the customers' bargaining power is going to be stronger, and there'll be competition that will drive down finance charges in this business. So intensity of rivalry will be higher, And bank services, again, require great agility and adaptability. Okay, so policy outlook for 2025, subsidies, when you say complete removal of subsidies, that is not what it is. It is removal or reduction, sharp reduction in petroleum subsidies. But those funds are going to be used to subsidize some other types of activity, that is health, education. So subsidies will move from just petroleum products to other areas. There will be some subsidies. The subsidies in the money market will also reduce, and part of it will be passed on to intervention funds. There will be debt refinancing of debt at the national level, both domestically and externally. And there'll be monetary policy normalization. So key domestic indicators that we have to look at are there are about 6 of them here. GDP growth. In 2024, we are looking at 3.4, 2026, 3.3. End of inflation at the end of the period in 2025 will go down to 19.9 and gives a drop to about 14% in 2026. The fiscal deficit as a percentage of GDP will come all the way from a deficit of 6% to a deficit of 4.5%. The NPR begin to come down to about 20% and hang in there. The exchange rate, we've said, because the price of oil slows, but Nigeria's other exports and other earnings will increase. I do not believe that the currency will move as low as 1747 in 20. As a matter of fact, we think 2026, it should be appreciating towards 1500. Current account balance as a percent of GDP will go down to 2%, and total factor productivity, which is a major thing, will be positive. It's positive this year, 2.4, positive next year, 2.8, and positive 2.8. And when you have a positive total factor productivity, it means output is increasing and your chances of going to a recession are lower. So in summary, economic growth will remain positive, but mild. But something I want to say is that if the tariff on, if the debts the power companies are owing the banks is reduced or wiped out, and every 1,000 megawatts increase in the power supply will give us about 0.25% increase in GDP. That alone, we can go from 4,000 to 8,000 means that we'll get another 2% increase in our GDP growth, which is not factored into this. We think that with surveillance on the oil pipelines, we think that oil revenues will increase. So if that increases and we get about maybe 200,000 barrels back in, that will be able to finance our foreign exchange thing. So if those 3 things happen, one, the power supply companies are given the debt forgiveness and investments going there, and power supply, the grid increases to about 8 to 10,000 megawatts from its current 4,000. We think we can get about 2 or 3% growth there. 2, because of telco investment, the whole thing around the pipeline vandalization and under declaration of oil sales will increase, will give us another 200 to 300,000 barrels of oil. If that happens, 2. And 3, if we refinance some of our external obligations efficiently, we will begin to see some major improvements. So what we are giving you as projections are kind of baseline scenarios. So investors now, please be looking at our growth rate, look at our inflation rate, and look at our interest rates. So these are the scenarios. We think that monetary tightening will continue in 2025 and ease up in 2025. We think that the stabilization plan will kick in very well in 2025, but it will, because of its small size, it will have limited impact. Also, we think that the best case scenario, which is what we hope for, the inflation comes down from 28.9 to 25.9. In some cases, it goes all the way to 12.9%. So it's not a basket case. The exchange rate outlook, it's not a basket case. As a matter of fact, we see it actually begin to appreciate like the things I've said. The Dangote refinery will produce, and we will agree on a price structure that keeps the economy efficient. As a matter of fact, Nigeria begins to export refined products all the way to the West African coast. customers will have less to spend, and they'll move from one product to the other. We think that with that, and the Naira becoming stronger, we may begin to see a reverse jackpot syndrome, hopefully, by 2026, 2027. Now, the thing is that we have elections in 2020, end of 2026, 2027. And so political risk is a major issue. But all things being equal, Nigeria will overcome its current crisis. And all things being equal, there might be, and I'm picking my words very carefully, there might be some better days ahead. Thank you very much, ladies and gentlemen.
Thank you so much, sir. Thank you so much for this insightful presentation. A few questions, obviously, as usual. You know, as we can see, Nigeria has been hit with one of the worst economic crises in decades. And obviously, one of the major issues has been, the insecurity, the petroleum price that directly impacts food inflation and all of that. And with the fact that we always know that there's a lag between policy reform and the effect in the general economy. These projections for 2025, how and beyond, what's the word now? How strongly do you think they would manifest quickly? Because as we can see from your presentation, petroleum price is expected to go to 1,200, you know. So how quickly will this, would the positive outlook actually manifest?
Yeah, okay, let me it's a very, 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 very important and valid question. So let me say, it's not that the reforms started in 2023. The reforms have started for a long time. The reforms include, it's not just government policy. The reforms include the investment by telcos. And telcos have been investing $1 billion a year for the past 5, 6, 7, 8 years. I want you to imagine what would have happened if you didn't have 4G, you didn't have 5G. I want you to know what would have happened if we now have 125,000 base stations in Nigeria, right? I want you to imagine what would have happened if we didn't have the central clearing system, where we are now doing almost 19 trillion naira worth of transactions in a month, right? So these reforms have been coming, but the cumulative effect of it is that towards the end, which is now, when we are looking at petroleum products, we are looking at exchange rate, we are looking at power, and we are looking at the interest rate scenario getting close to inflation. The impact, the economy is more in equilibrium than it was 5, 10 years ago, right? The technology makes it possible for you to know exactly what is happening a second after. So the markets are more perfect than they used to be. Therefore, achieving macroeconomic stability, equilibrium 1 and stability 2 is much easier. And that is why we are saying that if you do certain things, for example, if you move the exchange rate today by 20% in any direction, the effect will be felt almost 24 hours later in the supermarkets and the shelves everywhere. So, and that's why, in spite of the fact that we have gone from 800 to 1,700, we haven't seen a corresponding increase in prices in all segments. Nobody would tell you that so your landlord has increased the rent, but they have not increased it by 1,000%, right? Yes, they've increased it, but so I think that the effect of these things are transformational in the sense that let me just use another example. 2 years ago, going from Lagos to Ibadan, the minimum time you would have spent was about 4 or 5 hours. You will spend 2 hours by a redeemed camp, right? Spend another 1 hour by a mountain of fire and all that. Then before you get to Bulgaria and all that. Today, on a good day, if there are no problems, from Berger to Ibadan will be 1 hour. So does that mean something? From 5 hours to 1 hour? And you can make a phone call. You can do what, not to talk of, now the Dangote refinery is up there. The road from Ekpe to Shagamu in Ijebu is going to be portable carriage and all of that, autobahn style. Will that mean something? Yes, it will mean something. So I'm saying that each of these investments have an output effect, and the output effect is going to be felt. And we shouldn't just assume that we only see the bad things. We should see some of the good things that are happening. I think that's the thing, and take advantage, see it as an investment opportunity. It's not about which government is in power. It's about, is there an investment opportunity now, right? Is there an investment opportunity in power supply companies in the south and northern parts of Nigeria? Yes, there is. Is there an investment opportunity investing in tools? Yes, there is. Is there an investment opportunity in investing in ethanol? Well, right, there is. So I am of the view that this is the most difficult patch for Nigeria's economic reform. Very difficult. It's not easy. The cost of living is a major crisis. But at the end of the day, you have to. We will have to adjust our incomes to address the price level. We have to adjust our, minimum wage of 70,000 cannot buy a pair of shoes, right? Cannot buy a bag of rice. It's half. 70,000 is about 60% of a bag of rice. 70,000 naira will not buy you a bag of beans. Coca-Cola at 400 naira a bottle is maybe quite expensive, right? And some people are saying, when will this come to an end? It never comes to an end. It only means that its prices will increase at a slower pace, and in some cases reverse. But to answer your question, Madam, I think that the time lag between policy and impact is going to be much shorter, and that the economic managers of this country had better manage it efficiently, or else it won't take long before the crowd will turn on the streets. So I think that the people who are managing this economy now are fully aware of the impatience and intolerance of the audience. I think there's no question of that. And the market is a major disciplinarian of policymakers.
Thank you, sir. All right, I have two questions on the bonds, two bond questions here by Chechige, and he says, what is your thinking of projection of Ghana Euro bond, especially with the challenges experienced? And also, what is your thinking or projection of the Nigerian dollar bond in relation to the current economic uncertainties versus ability of the government to fulfill its obligation in the long term?
I think, as a matter of fact, we should have done justice to that topic, because since we are looking at the investment environment. So let us look at two things. One, if I had 1,000 naira or 100,000 naira, and I invested in a Nigerian treasury bill, I would have gotten maximum of 24%. So I would end up the year with, so let's say it's 100 naira, I would end up with 124 naira. If I took that 100 naira and bought dollars at 1,600 or 1,700, and I invested those dollars, right, in the Nigerian diaspora bond, I would have gotten 10%. So I'll end up with $110. So which is more profitable for me? To have $110 at the end of the year, right? Or have 124,000 naira at the end of the year? Definitely. The fact that I got a 10% return on my dollars is much more efficient than by getting a 24% return on my naira. Why is that so? Because the naira, there are three buckets. One is I kept my naira under my mattress, and hopefully no rat came to eat it. So that naira will be worth, at the end of the year, will be worth 70 naira, because 30 naira of it has gone as inflation. So I started with 100 naira, but don't forget, money is money, what money can buy. I started with 100 naira under my mattress. I ended up at the end of the year with only 70 naira. I took the 100 naira I had, and I put it in a treasury bill. I ended up with 124. I took my 100 naira, converted it to dollars and got the dollar value plus 10%. So I got $110. I have 124 naira, and I have 70 naira. So it makes more sense for me. So what have people done? People have gone to go and buy, converted their money in the black market, put it into their DOM account, took the money from the DOM account, even though they say it must be there for 30 days, put the money in the DOM account to buy bonds, right? So as an investment outlet, store of value, you could take that approach, right? But the point is that if I need my money pronto, if I have my Nigerian treasury bill, I can sell it automatically anywhere, and they'll give me a discount price or whatever it is. If I have my money under the mattress, I can spend it anytime I like. I just jump. I don't have to wait till the end of the year. I'll spend it. But if I have a Nigerian dollar bond, diaspora bond, and I want to convert it into dollars, cash, it's not as easy as, right? So the difficulty is that there's no secondary market right now in that Nigerian diaspora bond, and there's no, we cannot test its liquidity, but Nigeria has enough dollars to do this. The issuing houses have not created a secondary market yet, but that will come. So I think that the bond issues are good. I think we shouldn't put too much of our portfolio there. I think we put part of our portfolio again in treasury bills. I would put part, again, 30 to 35, 40% into equities, and when equities begin to come down. So the investment environment in Nigeria for 2025 looks averagely fairly good. And therefore, since we think inflation is going to start declining, we think that Naira will begin to appreciate marginally and gradually, and we think we begin to get some growth. One can say safely that all things being equal, especially because of the emergence of the Dangote Dangote fertilizer and refinery project, that will help bring some sanity into the Nigerian economy. So
on that,
a bad case.
On that point of the Dangote refinery, Funsho was asking that can we really expect the exchange rate to improve due to Dangote refinery coming on and the expected 40% less in demand for Forex, given the fact that almost 33% of our Forex earnings will also disappear from the crude for Naira deal?
I think that is one of the biggest myths in Nigerian economy. And you see, as long as people continue to keep quiet when people are saying the wrong thing, then after a while, the wrong thing becomes the truth. Today, let me explain it carefully for everybody to understand. Today, crude oil is being exported to be refined for us. So we are actually buying refined products with crude oil that we exported. The crude oil we would have exported would have given us dollars. Therefore, we're buying the refined product in dollars already. By giving Dangote 300,000-400,000 barrels a day, we are paying Dangote with crude, right? And he is buying it at the Naira equivalent of the dollar rate. So it doesn't matter if I go and buy an iPhone on ShopRite, they will sell it to me for $2 million. They won't sell it to me in dollars, but if I say I'm not going to buy it, it's too expensive, the alternative for me to go catch a flight and go and buy it at $1,200 or $1,100. So you see, this is what we call playing with mirrors. The truth is that the price of a good is its cost plus the margin. It doesn't matter whether you buy it in Naira or buy it in dollars, because at the end of the day, people are still going to buy the Naira. So 1,300 equivalent in dollars is a certain amount, maybe $1, less than $1, about 80 cents or something like that. If I go to Accra, it's $1,100. So instead of going all the way to Accra, I might as well sell it. So let's not deceive ourselves. Secondly, it is not true that we are paying for our imported petroleum. We are paying with crude, right? And therefore, it's not going to save us. The crude we would have sold to get dollars, we are selling to Dangote. And the dollars we would have used to import, right? So it knocks off itself. It's 1/1 equals 1. That's what it is. So let's not. I've heard so many misconceptions. What Dangote is promising and is confirming that I will sell petrol at cost plus a margin, and it can sell to NNPC. It can now sell to independent marketers. So the independent marketers cannot buy it from him at 1,100 or 1,200 and sell at 900. So it's not going to work. So right now everybody's struggling as to who is going to pay for what. So I can guarantee you that the Dangote refined crude is good. Refined products are of good quality. I can almost confirm to you that they are able to produce as much as the crude they are given. I can confirm to you that no refinery works on one single source of crude. Every refinery uses blend. So even if he gets all the crude he wants in Nigeria, he has to come bring from another country what we call it WTI or the Saudi Arabian specification to blend it to get the product. So, and that refineries also, one thing is clear, there are refineries in many countries that don't produce oil, in Holland and Belgium, and they work. So the fact that this refinery is situated in an oil producing country does not make it has to operate and compete in the global markets. And if it doesn't get crude here, it will get crude from Ghana, it will get crude from Ivory Coast, I think, or from Gabon or Equatorial Guinea, or from Saudi Arabia for that matter. So I think that's the important thing.
All right. I'm going to join two questions from Awele Akemu and Margaret Okay, because they are related. Awele says, do you think enough is being done on the fiscal policy side to attempt to balance the impacts of monetary policy? And Margaret says, don't you think, sir, that the government reforms are doing more harm to our economy? Nigerian economy is not competitive. It is import dependent. We export crude and import refined products. With all this, we decided to allow our currency to compete freely in the international market. So
well, it's a very interesting question. And our import profile and our export profile has not changed dramatically. But in the last 40, 50 years, there have been years when we did well, and years when we didn't do so well, and some years when we did very well, very badly. So to say that whether it's import dependence or whether we could export, so the problem is not with the composition of the exports or imports. It is the way the country is being managed. So, but we've had different leaders, different managers, and different things all this time. So the reality for me is that I think that one, the economy, you alluded to the fiscal monetary policy coordination. That's one thing, and those are sound bites. The only way that you know an economy is performing is if two things happen. One, if the generation that has come after you, that's if you have small children, you can say that the children are living a better life than you did when you were a kid. Two, if the generation before you, if you are living a better life than your parents, but if your parents lived a better life than you, and your children are living a worse life than yourself, then that economy is not delivering value to it, because it's intergenerational wealth. Okay, will it remain that way permanently? No, it will not. So all of these things that are happening should technically lead to an improvement in the quality of life of people. I think that is the most important element that I must leave everybody with, and that the struggle for economic emancipation and growth and development are two different things, is not a sprint. And the indicators that you use to measure and evaluate performance need to be reviewed from time to time to make sure that they're functional. So I would say, without fear of contradiction, that the economy is probably on a mend. The economy could do better, could be infinitely more efficient if conflict of interest is not allowed to foster. Right? I also believe that the policymakers and managers of the economy are fully aware that if nothing is done to change the trajectory of growth and happiness and welfare of the people, that this is a time bomb. And Nigeria, the unfortunate thing is that the crisis in Nigeria is not a Nigeria specific issue. If 200 million people in Nigeria start running in different directions, all the way to Burkina Faso, to Cameroon, to Togo, Benin, Ghana, it won't, I won't like to be in the way when even 2 million Nigerians are running across the border. I won't like to be on the other side, because they will crush everybody that is there. And there'll be no peace in Nigeria, so, and there'll be no peace in neighboring countries. So let's not imagine it. So what I'm saying here is that we have no choice to do it right, and to keep a lead on the problems here. Let us not take it across the boundaries.
Okay, thank you, sir. The final question that we can take, there are so many questions, but this is the final one we can say. Caleb obviously says, thank you for the insightful session. And asks, how will the continued tightening of monetary policy influence the yield curve and borrowing costs for households, businesses, and government in the short and medium terms? And should government prioritize increased infrastructure expenditure, potentially influencing net exports through enhanced productivity, or focus on adjusting monetary policy to stimulate foreign currency inflows to increase GDP?
Okay. Very, very, very valid question. In other words, what you are saying is, what are the limitations to the effectiveness of monetary policy in an economy that is structured like Nigeria? So if I take Nigeria as and I say total money supply is 100 trillion, right? And the total GDP is 347 trillion. Assuming that 100 and something trillion naira, 100, maybe say 100 trillion naira, and you increase the interest rate on this 100 trillion naira, so let us say 50%. By how much will savings increase in Nigeria because of that? And between the time when savings will increase, how much before it becomes investment, and between when the investment is made and when you get the output? So you might have a situation where we call the paradox of thrift, where you have increased interest rates, you have increased savings, you have incentivized consumption, and the theory of Salas Mana, who kept all his money and died with his money, looking at his money because he couldn't spend it. So it's called the paradox of thrift. There's a balance, a trade-off between how much you must save and how much you can invest, and the time between investment and when you get impact. So that's monetary policy. And so I do not think that we can continue tightening in an economy where the impact of tightening is less felt on prices over a longer period. The question you ask yourself is that if on a particular day you go to the market and you tell a market woman, whisper into her ear, come on, madam, you don't just say they have increased interest rate from 10 to 20%. So the woman in Sangos, right? Right? But if you tell the woman that, do you hear that dollar has gone from 1,700 to 2,000? Immediately, she will stop selling everything. Say, So I am saying that the economy is more exchange rate sensitive than it is interest rate sensitive, because that's how they can transmit prices. So they did what they call e-Naira. And when I criticized e-Naira, the central bank governor was on my back and said, I was discouraging financial inclusion and all of that. And I said, go to the market and go and ask the woman whether I want to pay you with e-Naira. She said, I will give you e-Egusi or e-Yam. So there's nothing like that. And that's what I said on China, and everybody said, I'm not joking. No, but that is the truth. Some of these principles are very, very abstract. So let's call a spade a spade. From that day to now, how many people have paid you with e-Naira? How many people have you paid with e-Naira? But when I said it that time, it was as if, oh, this guy must be crazy. So my answer to your question is that money policy has its limitations. The store of value concept of money, people preferred, and part of the money supply really, is that it's in foreign currency deposits, which is domiciliary. So people it's not that. It is fiscal policy is about spending, expenditure, revenue, taxes. Those things affect people. And every time the government tries to overspend, it can either print money and cause more inflation, or borrow money and pay more as interest service. There's no free lunch in this whole thing. So, my friend, his answer is that monetary tightening has its limitation. Fiscal prudence has a place for it. And more than anything, there's a management problem, managing the aggregates, managing output, and convincing your people. And management is a function of credibility. The people have to believe what the government says. And if they don't believe what the government says, and the government only believes its own stories, then we are getting nowhere. So, point one, credibility. Point two, make sure that there's a proper sequence. Point three, only the truth can set people and the government free. Thank you.
Thank you so much, sir. This webinar is ideally scheduled for 10 to 11, but each time, because of the level of engagement, we always go over. Right now is 11:30 and we can't take any more questions. So we apologize to the participants, but that's just to show you the level of interest and engagement. And so we just want to say once again, thank you, sir, and see you on the next one. And see you all. Thank you, our participants. See you on the next one. I'll hand over to George Imade right now. George, are you there?
Yeah, I'm here. Thanks. Good afternoon once again, or good morning once again, ladies and gentlemen. We agree with me that the time spent in this webinar has been very worthwhile, given the exposure we have received, the knowledge gained, and the level of interaction that has been brought into this conversation today. You agree with me that it's been one of knowledge sharing, is one of great benefit, that we have been able to reassess our position in terms of whatever position we have taken, given the economic outlook or whatever is going on now, your investment position, and the excitement of 2025, that is going to be a better year, the silver lining down the road, in spite of the uncertainty that we are seeing. Opportunity for investment abounds. The energy sector is there. The equity market will present a buy side for those who are interested in investing there. And the AFA-Morgan fund is there, whether balanced fund or mutual fund. So it's going to be an exciting years ahead. And we are grateful for the opportunity to have this knowledge. And on this, I want to give glory to God for making it possible for us to have this edition. A lot has gone into it, and but we thank God that it has been successfully held today. And I would like to, at this juncture, commend and warmly and heartily appreciate our group managing director, who has relentlessly and unrelentlessly ensured that this program gets underway anytime we schedule to have it. He has been there for us. He's the group managing director of the ever-growing AFA-Morgan Capital. And he's there with his commitment, he's there with his resources, and he makes sure that the program is successful as it has been today. GMD, we thank you, Mr. Ade Braimon, for all that you do for humanities and all that you do for Nigerian public. God bless you indeed. And to our esteemed audience, we want to say that without you, this program would not have been, and it will always not be. And that is why we value you and we esteem you as one of inestimable value. Your contribution, your engagement, and in fact, the torrents of questions that have been coming on the way has helped to shape and reshape, define and redefine this edition, so that each edition of this program has been a better one than the previous one. Thank you so much, and God bless you. Please keep coming anytime we schedule this, so that we can all have the benefit of benefiting from the fountain of knowledge of our speaker. And on this, I want to thank our speaker, the man of great erudition. I call him Prof, because it cannot be, nothing can be more professorial than this. He's a man of global knowledge in terms of the subject matter he has been speaking about, globally and locally. It gives us the opportunity, it leads us into this fountain of knowledge for us to benefit from and be able to know how to navigate the future. Sir, we are grateful to you. You have been our friend. You are not just a friend of AlphaMorgan, you are a friend of this, our great audience, and you ensure that you don't hide anything back or keep anything back from the benefit of the larger population of Nigeria. Thank you so much for what you do. And that information you drop concerning our new space of operation, the banking license we got, we thank you for that information. And I want to assure our viewer that, or audience that the success we brought into the business we do now will surely be translated into the new banking business we are going into. And I assure you that you'll be well served, you'll be better served, and you'll be better managed, and the competencies and the skills set abounds to help you get the benefit for your investment in doing business with AlphaMorgan. On this note, we'd like to draw the curtain, and I want to once again thank everybody that has found time to be part of this edition. And I want to assure you that another edition is coming your way very soon, precisely on Tuesday, 17th of December, 2025, subject to the availability of our speaker. And I know he will be there because he likes you all and is a friend of the house. I thank you once again for finding time to be here. And as I look forward to seeing you on the 17th of December, 2024. God bless you for coming and have a great day ahead. Thank you.